Hey everybody, welcome back to another market update. Today I have Mihai with Mortgage Alliance. So today we're going to go through what's going on in the market, what's happening with interest rates, what's happening with the Bank of Canada, what's happening in the real estate market in general. Mihai, I'm just going to kick things off here just a little bit. So every every month I talk about what's happening in terms of listings and all that stuff. So basically, like as predicted, I said this last month, is we're going to see slow action during July and August, and then we're going to see a big rebound in terms of activity hitting the market in September, which was the case, right? We saw listings shoot up instantly, just like years past, right? So every year, July and August are typically slower months. So for sellers out there, if you did experience a little bit of a slower market while you were being listed in July and August. It is kind of typical. A lot of buyers are out there doing other things like getting ready for school, going on vacations, wrapping up vacations, weddings, yada yada yada. All that stuff does factor in. I mean, it is a big purchase, so you can't just do it while you're doing a million other things. But also a lot of listings do get taken off the market. I would say based on the stats that I saw. This last week, I would say probably about 45% of this line is older listings. So it's not brand new listings that hit the market. So this is something that a lot of people got to keep in mind, is that yes, we were getting listings hit the market this year, these couple months here, but a lot of listings expire August 31st, because let's say they were listed in, you know, May, June. It's usually like a 3-month window that they're listed for, and they have an expiry date of August 31st. So that's typically the case. And then as soon as they expire, if they haven't sold, they'll either cancel altogether. But we saw here, I was looking, and basically I'd say 45% of these are similar, like older listings that were just canceled, relisted at new prices, or relisted at the same price. And then the rest is, call it 55% of brand new listings. So just something to keep in mind. We are probably going to see listings shoot up another week here, and then it'll kind of trickle down towards the last few months of the year. But really, this is the window. If you're looking to be aggressive in the market, this is your window. September, October, early November is when sales are going to happen. As the closer we get to December, the less action we're going to have. So this is the new listings, just showing everybody, what's happening in terms of the activity and new stuff coming on the market. If you're a buyer out there, there's going to be lots of choice, which is great, especially in the townhome market. Everything sub 700, what I'm seeing, is the one that's really getting affected. Main reason is the people that are moving are the people that have equity. The people that aren't making moves and are waiting on Bank of Canada rates and waiting for down payments to be acquired. These are items that are, typically done by first-time home buyers that don't have as much free-flowing cash as somebody that, has owned their home for the last 10 years, has built up maybe $300,000-$400,000 worth of equity, and they can easily make the move, right? So anything sub 700 is taking a little bit longer to sell, even around 750, 800. But anything in the city and over 900 is, if it's priced right, it's going to sell. Let's go to the solds. So obviously solds, it's kind of the reverse, right? So solds is down this year down this week because the listings just hit, right? So typically we see the sales jump up the week after. So I think next week we're going to be kind of in a similar range. I don't think we're going to be over it, but I think we're going to be very, very similar to 2024. I think we're going to be, 2023 was a little bit sporadic. We're probably going to be somewhere in between the yellow and the blue. That's what I kind of see happening. But also, too, we got a lot of changes coming, right? We got an interest rate announcement that we'll talk about that in a bit. That's on the 17th of September, I believe. And then we have one more rate announcement in a couple of months. I think in 2 months. But yeah, let's take a look at the average price. So this is for residential only. So this is factoring in, when we talk about residential, that means like detached freehold homes. So homes that don't have condo fees or anything like that. And this is includes townhomes, semi-detached, detached, bungalows, farm properties, all that stuff. So this is, you can see, this is exactly what I was talking about, right? Like those homes that are not first-time homebuyer homes, you can see that they account for a large part of that, which made the prices go up a little bit. But if you look in your local market, like let's say if you're looking in the suburbs, townhome prices are kind of in the best place they've ever been, right? If you're looking for a townhome, semi-detached, there's some pretty good deals out there that we can actually look at after. And I've seen lots of good deals happen over there. I've gotten some good deals in the last couple of weeks. So these stats are very general, so don't take it at face value. You have to kind of look into your market segment that you're looking in and the specific area that you're looking in, right? Like if you're looking in Barrhaven and you're comparing it to, townhomes in Orleans and townhomes in Canada, those are very different segments, and certain areas of each one of those pockets might be very different than, like if you're comparing Stonebridge to Longfields in Barrhaven, those are two different segments too, right? If we're looking at, Chapel Hill South and Avalon in Orleans, again, very different segments and different amounts of inventory on the market. If we're looking at Bridlewood and Stittsville in Canada, I call it Canada as a general just because that's the whole area, right? But if you're looking at those different areas, there's different amounts of inventory in each one of those areas, and they all have their pluses and positives and negatives, right? So every area matters, and then same thing too. Glebe, Westboro, all those areas have very, very different things.
So where do you suggest that buyers look now? So your buyers, the people that come to see you right now,
so
looking for a home, for a deal, but also something that makes sense.
So I can't, personally, I say, where do you want to live? Right? That's the most important part, right? Like, do you have family in a certain area of the city? Do you want to be close to family? Do you want to be further from family? Do you want to be in a certain amenity? Do you want to be close to your work, right? These are all factors that make sense. Certain area like Barrhaven there are some really good deals in Barrhaven, but also Barrhaven, in my opinion, has some negatives right now, right? Like there is negatives of high traffic, right? There's a lot of traffic in Barrhaven because, they have a big Costco. They have, that whole row of Strandherd Road is, all shops and amenities where there's high traffic points, right? There's a couple of dealerships on there. Like it's all high traffic areas.
So it's better if you work from home, essentially.
Oh, yeah, that's gone now, right?
The few people that can, yeah.
But like the other thing too is Barrhaven also has that Amazon center, right? Which provided a lot of jobs, but increased traffic, right? So these are all things like, Barrhaven has its own set of rules of traffic, and it's very different than being in Riverside South, right? You cross the bridge to Riverside South, you're in a complete different price point and a complete different quality of neighborhood compared to 5 minutes down the street. So,
and these are things that people do not know unless you've actually lived there. So that's, I think, one of the key advantages.
I grew up in
younger,
Barrhaven.
I didn't.
I grew up in Barrhaven. I've been living in Barrhaven for almost 15 years, right? So it was very different when I was there, though, too, right? It was, we didn't have anything in Half Moon Bay, or Stonebridge was just getting developed, right? So there is pockets of Barrhaven that are very nice. But same thing could be said in Orleans and Canada. Like there's every single pocket and area has its own different price, different perspective, and different way of life.
I like the fact that. Sorry, interrupt.
No,
I just want to say I like the fact that you tailor your approach to each client. So you're not just saying like this is the one neighborhood that's hot right now.
Yeah.
I think, and this is the value. When I was younger, like 20 years ago, when I was buying my first property, I did not understand the value of a realtor. I just thought, okay, I can negotiate myself, but it's so much more than that.
Yeah, you have to know.
Yeah, exactly. You need somebody who knows, who has market experience, who understands the neighborhoods and all the parameters.
Yeah.
Because all the stuff you're telling me right now, I know, but I didn't know that.
Yeah, it all factors in, right? And like that's the thing. Like we have, like the majority of people buying and selling right now is going to be people that are relocating.
Yep.
Right. Every year there's relocations everywhere. Are people in Ottawa going to be moving just to upgrade? It depends, right? I don't know the specific demographics that are upgrading and downgrading and downsizing and upsizing and condensing and all that stuff, right? But if you're a buyer from outside of the city, these are all factors you need to know, right, before you get into a city, right? Like the same thing if I'm moving from Ottawa to GTA. Well, that's a huge different area. Like there's complete different areas, right? Like you can be in Vaughan, York, Mississauga, Toronto proper, like all these complete different things that change prices, change ways of life, quality of life, all that stuff, right? So, but yeah. So we're just talking about residential sale prices. Here it's residential and condos. So this is the general market. This is where a lot of stuff like this one is more generalized, but doesn't really factor in, right? Like it's a general outlook on how the year is going, but it's very much so persuaded by the prices of condos because the prices of condos have come down so much, right? And condos are not really attractive right now. And I think in Ottawa, they've never really been that attractive. I know a lot of people, like you also have to start somewhere too, right? If you're first-time home buyer with minimal down, like what really can you get? Can you get a freehold? Probably not. You have to start in a condo, live in it for a few years, build up equity, then move up into a townhome, then go into maybe a semi or a small detached, and then from a detached go into your dream home, right? So that's the step to a buying process. You can't just, you know, one year you get a good salary and all of a sudden you you can go buy a detached home that's $1 million, right? So I think these are very generalized stats, so it's something to be aware about. And yes, the market is in a good position for buyers. The good news is you have lots of choice. Are all the choices good? Not always. So look at a couple of homes. Look at a couple of different homes. You don't need to be jumping on the first home you see, but if you see the right one and it makes sense, then jump on it. Because all homes are not taken care of the same way as others, right? So that's one thing I like to talk about is every home has its, ups, positives, negatives, and what does it really mean to you as a buyer, right? Do you want to be buying a home that's fully renovated, or do you want to have something that maybe has, maybe it's priced a little lower, maybe it's a little bit dated, but you're okay to do some touch-ups and some renos, and you can live with some certain things, right? Because at the end of the day, everybody buys the home based on what it's going to cost them per month, and
Yeah.
maybe a fully renovated home might cost you $1,000 more per month, which is a huge difference in terms of your quality of life. So yeah, that's like basically general market stats. Let's get into the meat of it. So
I
we've
thought we were in the meeting.
yeah, well, the big meat of it, because we got a big announcement coming up. So we have September 17th for an interest rate announcement, and then we have October 29th interest rate and monetary policy announcement. So I think this one, the monetary one, I think I heard some reports that they're not going to look at inflation as strictly as before. Is that correct, or is that?
I've been hearing things. I'd wait until we
Yeah.
get the report out. I think they're putting out feelers. They're seeing
Yeah.
they're still in the process of gathering information to make a decision.
Yeah, because the monetary policy announcement is basically for the inflation, right? So we know inflation has been, a big challenge for the last 3, 4, 5 years, but also the job economy is horrific right now.
Yeah.
Based on government of Canada, a large section of jobs in Ottawa are government jobs, so that's one thing to keep in mind. But also, something's got to give. So I think this announcement here, I think we're probably going to see a 0.25 drop, because we haven't seen a drop in the last three times, and that's basically the past 6 months, right? Yeah, March to now, yeah, 6 months. So the last one was 0.25. So what is it going to take? It'll bring us down to 2.5 as the overnight rate. What is that going to mean?
Lower interest rate, and it might stimulate the lower mortgage payments. I mean, for those who have variable rates, or more, depending on the type of rate you have. So you can have either your mortgage payment is going to adjust, or the portion of your mortgage payment that goes to your interest will be smaller, and you're going to cover more of the capital. What it might mean. So first of all, I don't have a crystal ball. I also think there's going to be a 0.25 drop.
Yeah.
But we're in between the hammer and the anvil right now. In order to keep inflation at bay, you have to increase the rates, but in order to stimulate the economy and get out of a recession, you have to decrease the rates. So right now, it's going to be a choice that they make. So they have these, and it depends on how they weigh it. In terms of impact, usually, historically, when interest rates go lower, people can qualify for more. There are three variables when it comes to how much you can borrow, and one of them is interest rates. So if the interest rates are lower, house prices might increase, and the market may, I wouldn't say overheat, but there may be buyers who are waiting on the sidelines who will now look to get in. Not a big drop though, so I'm not sure, because we are heading into the winter months when the market is slower. People who bought already, so I would think it's the investors and people sitting with cash on the sidelines that might be looking to take advantage, and I'm not sure that that's a substantial enough drop to stimulate.
Yeah, and it's for
purchases.
variable people too. It's not for fixed rate people, right? So that's, I think, it's tough. If we look back a year ago, prices were higher a year ago. Rates were higher a year ago. 2 years ago, prices were higher. Rates were higher, right? So what's the bottom? That's the question. Do you want to wait till you get to the bottom, and take a gamble, because you could be at the bottom, or you could be on the way up already?
That is a very good point. And I think I mentioned this another time. It's always a good time to buy if you can hold for 10 years.
Yeah.
Like, look at what happened in 2008 in the States, right? Like,
Yeah.
there was a huge drop, I think 40%,
Yeah.
60% in some areas.
Yeah.
By 2014, most of those areas had recovered. And, now 15 years later, prices are again through the roof. So if you can hold, the only problem is if you invest with a short-term mindset,
Yeah.
and you want to invest to sell in 3 years or maybe to refinance in 3 years, then you risk capital you shouldn't be risking, then you have a problem. Otherwise, it's always a good time to buy. That's what they do in the stock market as well, right? Dollar cost averaging.
Yeah.
So because you can't time the bottom, they buy and then they might buy more at an even lower price, and then eventually it does rebound.
Yeah. And I mean,
except for Japan, I think they still haven't gotten back to the 80s level, but that's a
different market. But
different market.
like think about it this way too, is like timing in the market over timing the market, right? So the longer you spend in the market, meaning the longer you own your home. So like, let's say you're a first-time home buyer, right? Like let's bring it from a first-time home buyer up until a buyer that's upsizing.
Yeah.
Okay, so the people that are the market that is active right now, that has the most amount of movement, is the market that's above 800 to 1 million and more, right? And those are people that bought 5 to 10 years ago, that have built up equity and are like, okay, now I have 100, 200, 300,000, maybe four. It depends. All these things depend, right? But these are people that have lived with their mortgages. They've lived with the life that they've had, haven't thought about making moves and in and out of the market. They just said, okay, we're living our family life, we're doing our thing, we're saving up money, we're living in a townhome, or we're living in a small single, or we're living in a condo. And when we're ready, when we have enough money saved up, plus whatever we've built up, that's when we'll make the move. And that's who's thriving right now, because they haven't timed the market. They've just been in the market so long that it's bound to pay off for them, right? So like it's not going to be an overnight success like what people think would happen in 2021 and 2022, where people bought a home in 2019 and then 2 years later all of a sudden they're making double, right? Like that's not going to happen.
That is unusual.
Right. That was a specific circumstance which I don't think will happen in a long, long time, right? So, and when it does happen, we'll know exactly what's going to be waiting for us.
That's a very valid point. Essentially, time in the market always beats timing the market.
Yeah, and we can flip that back to the stock market too, right? So if you're making investments to the stock market, can you make money day trading and like looking at flips and trends, and I'll make $100 today, then I'll get an option for this and make $200 tomorrow, and then yes, but that's also very risky. Whereas you just put, if you consistently put money into the S&P 500 for 10 years,
exactly,
you're bound to just make money regardless, right? So, and you can't outwork consistency.
People forget the impact of inflation on all this. Even if inflation is 3% per year, essentially that mortgage that you get, that you think about the homes 30 years ago.
Yeah.
How much did they cost? Having a $200,000 mortgage
$100,000
for a house that is now worth $1 million. I understand that, yes, there have been some spikes that were unusual, like in 2020. But overall, because the money keeps devaluing, the value of your mortgage, your $800,000 mortgage now, if in 30 years the houses are worth $5 million, your mortgage will be paid off. But let's assume even you kept your mortgage at $800,000. Okay, in 30 years that $800,000 won't mean that much, because salaries will have increased, everything will have increased. So if you're making $250,000,
carton of eggs may be $30.
Yeah, that's
right?
That's scary, but yeah. So that's why in the end, if you can hold, it's always a good time to buy.
Yeah.
And it's even more important, as you've seen here, you need to deal with experts. It is doable as an individual to go and look at all these trends, but it's a full-time job.
Yeah.
And that's why you have to deal with experts, such as yourself, such as a mortgage broker, like lawyers.
Well, yeah,
you have to have a team to support you.
Yeah, like I invest in the stock market, but I do it on a daily basis? I just don't have the time to do that, right? So what do I look at? I look at either talking with my bank rep and like financial advisors, and just like you said, right? Like you can't just gamble this money away, right? Like it's essentially, that's what it is. Same thing as if you were to invest in a house and then try and flip it in a year to make some profit. It's a gamble. You don't know, right? Like last year, everybody was saying, like I was saying too, I was like, okay, this is like 2025 was a decent year for buyers and sellers. And I think, 2024 was a decent year. And I think that, 2025 is up for a big rebound. And what happened? We got hit with tariffs that nobody expected. and the year is completely different. Right,
100%.
so we're one thing away from having a huge seller's market, but instead we got the reverse. We got a more buyer heavy market, right?
100%.
So if you're looking short term, it's all a gamble. If you're looking long term, you can't lose. That's my thing.
That's it. And many people need to think more long term.
Yeah, yeah. There's no like overnight successes don't happen that often, right?
In
Sometimes,
hindsight, they do, right?
yeah,
Like Bitcoin, you can think about all these things, 2019, 2020,
yeah.
the
But that
spike
was
of
time in the
Bitcoin,
market too,
true.
right?
But that's also hindsight. Like some people, now with the wisdom of being able to look back and seeing, but you don't know. So right now, you can either stay and try to time the market and figure out when the crash is
Yeah.
going to happen, or
And go through a lot of stress
Yeah.
doing it.
exactly, and then frustration when it
Yeah.
doesn't. I know some people have been trying to time the market since 2017, 2018.
Yeah.
They're still waiting because, it went up, and then they're like,
Yeah.
well, it went up even higher. Now it's going to have to go down.
Yeah.
It might, but even if it does, I'm not saying it won't. I'm not saying the market will go up all the time. Okay, so that's
Yeah.
not what I'm saying. But I'm saying it on a long enough time frame, it usually rebounds. I like to think I personally have children. I like to think from like a longer.
Yeah.
I'm
What am I gonna
saying
do for
10
them?
years, but I'm looking at a 30, 40-year horizon if I can.
Yeah.
So then on a 30, 40-year horizon, I don't see how we can have deflation, which is the opposite of inflation, for 30 years straight. That would be, I'd love to be proven wrong. But
No, it's like just like you said, the Bitcoin thing, right? Like, what did a Bitcoin cost friggin' 10 years ago, right? What was it, like a couple bucks?
well, they bought, I think, yeah, and more than that. I think 15 or 18 years ago, some guy bought a pizza
For like
with
100,
80
100,
Bitcoin.
yeah, exactly. Which is how much? It's like a couple million or whatever it is, right? Doesn't matter. But like that's the thing, you don't know, and you don't know what's gonna happen. So just buy and hold.
You have to take, no matter what you do, I think, is whether it's in the stock market, real estate, you have to take action.
Yeah,
I have a friend who said something to me. I knew it. I think we all know it, but he said and he said it in French. But if I translate literally, it's like
yeah,
you don't get anything done from the couch. It's not true. It's obviously you
Yeah.
can still use your phone and whatever. But like the point is, yeah, if you don't get up and do something,
yeah.
you're not gonna be able to achieve much. You get lucky when you take some risks and
Yeah.
put yourself out there.
No risk, no reward, right? And that's kind of what every industry is kind of like. I think like there's calculated risk, but there's also like you don't know what's gonna happen. Something might, like you could be looking at something that, like I'll give you a real estate example, right? So, we had a home that was up for sale. We thought it was overpriced, and we were coming up to 90 days on market, and we're at 86 days, and yeah, we sold it in multiple offers 2 days ago.
Wow.
Right? So this is you don't know, right? Like would we have sold it sooner? Yes, for sure. And you got to also factor in, okay, it is sold now, but what is your, like, if this is an investor, like what is your carrying cost, but opportunity cost, right? Did you miss out on opportunities by not selling it sooner?
True.
That's the question. And how much were you into it for? Like there's so many different factors, but like, that's another way too, is like the current market is not that, great homes are going to sell quickly, because we still don't know that. It's really luck of the draw, right? Is how well does your home sell? How well does your home show? How well is it priced? And the location, is it good? Is it in a location where there's lots of buyers and lots of buyer demand? That's the question, right? And if you're in a low demand area, you could be priced very well, but if there's 7, 8, 9 other homes in a close cluster, it's gonna seem overpriced because there's very little action. Those homes are just sitting, right? Like if you have six homes for sale in a neighborhood, and there's only 2 sales in the past 6 months, well, you have like a year's worth of inventory.
Yep.
Right. So like, and that's just because there's 6 homes in a cluster in an area that doesn't sell like hotcakes, right? So
That makes me think of a very good point, that people need to plan ahead, and the good way to plan ahead is to deal with experts, ideally a team, because teams outperform solo players. So, for example, in your case, if you're like, I'm an investor, I'm just planning to sell my house.
Yep.
Don't wait until you really want to sell, like the month you want to put it up for sale. Talk to a realtor
Have a
before,
plan.
because have a plan. Talk to Dean. Like
Yeah.
you will tell them, okay, this is what's happening right now. Maybe now is not the time. Maybe it's in 6 months. And then if you wait until the very last, it's the same with mortgage brokers as well,
Yeah.
right? You need to know where you're going in advance.
Yeah.
And
And
anyway,
have a
yeah.
plan, right? Like some people say, like, oh, like I have such and such saved up. Okay, but did you factor in lawyer costs? Did you factor in, closing costs? Did you factor all these things in, right? So like, our price is going to dramatically change over 6 months. Nowadays, probably not. 3 years ago, yes, but like nowadays, it's a lot more. You can actually plan things. You can negotiate things. So it's like you can be on the horizon and be looking at what's about to happen and planning your move around that. And you don't have to be. Yeah,
You don't
sorry.
have to do it solo, and
Yeah.
be proactive is, I think,
Yeah.
the advice here. Talk to people. It costs nothing, especially as a buyer
Yeah.
dealing with a realtor, costs you nothing. Unless you're the best negotiator on the planet and you're able to negotiate to, like to the max. Dealing with, I've always come out ahead. All the properties I've bought with an agent, even though I'm pretty good at negotiating.
Yeah.
But there's always angle, even for somebody in the industry. There's always angles that you don't consider. So
Well,
for
you're dealing
somebody
with
who's
people that are negotiating for a living, and
exactly
you're
and doing
doing
analysis
and
for a
you're
living,
doing it once every 5 to 10 years.
exactly.
So like that's the one thing is like yes, like there's a lot of good buyers that are very knowledgeable on what's happening out there, but it's also too like you got to look at it from a couple of different perspectives. I think that like for me, my biggest thing is like looking thinking outside the box, yes, but also like looking at all aspects. It's like, sometimes it's okay to like say no to a house too, right? Like if there's a home that you love and it's not making it work for the numbers to make your family live in it, and have a good life in it, then maybe it's not the right home. Maybe you need to look at something a little bit lower. Maybe look at something different, maybe in a different area, all these different things.
That you
Whereas,
can offer. Whereas if you're all alone, you're going to convince yourself and rationalize and buy
yeah.
it and then get.
Well, that's the one thing too that I've noticed is we've been getting actually a lot of buyers looking kind of on their own, which I think is a factor of a couple of things. Obviously, the real estate industry is saturated with agents. Same thing with mortgage brokers, right? There's a lot of us out there, and how do you know someone's good at their job, right? Like, how do you know an agent has been trading for more than 6 months, right? And by trading, I mean how do you know they've been selling houses for more than 6 months? How do you know a mortgage agent has done more than one
Transaction.
pre-qualification, right? So it's really like getting opinions from more than one realtor is always a good idea. I always recommend that, right? Like, hey, and I tell every person that I meet, like, hey, you're not like, if you don't like what I'm saying, that's no problem. We can just walk away from each other, and that's that. But, and I think a lot of people like probably have dealt with less than 3 agents, so they just take everything at face value, and then when they're unhappy, then they're like, you know what, I'm never trusting an agent again. I'm just gonna look on my own and deal with the listing agent and yada yada yada, right? And listing agents it's that's fine. There are some people that will help you buy and sell a home while they're listing a home, but ultimately you want to have your own dedicated agent looking out for you.
Representing you.
Yeah, like it gets tough out there because there's like there is a thing called multiple representation where one agent is representing both sides, and really you can't do that. Like you can't represent both sides ethically and properly, right? Like realistically, if you're the listing agent,
You want to have the highest price
well, yeah, like you
for
you're,
your
you're
buyer, for your
originally
seller.
you originally started working for your client,
Correct.
which is the seller, right? How are you going to be able to help somebody buy that house while you're representing the seller, right? Are you gonna, hey, Mr. Seller, I have this buyer, they're interested, they want to get a lower price. I can knock down my commission and, get them the better price that they want and still get you a sale. Well, in that case, are you really helping out your seller? Probably not, right? And then in reverse, hey, Mr. Buyer, that's great, and we've had a lot of interest in this home. Let me know if you'd like to make an offer.
Yep.
And then they'll say, okay, well, I want to negotiate. Sorry, we're not, make your best and final offer. And then, you never know if you overpaid for a house or not, right? So that's why I always say representation is key, and sometimes interviewing more than one person is great.
What questions do you suggest people who are interviewing realtors ask just to get a sense? I have a couple in my head, but
I would say, like, for me, the most important thing is like, hey, Mr. Realtor or Mrs. Realtor, do you work in a specific area? How long have you lived in Ottawa, or whatever city they're from? Like how well do you know the city? The other thing too is you want to look out like what do they provide for you, right? Like, do they give you market updates? Do they give you analysis? Do they tell you about what's happening in the local areas, right? Like, if somebody asks me, hey, Dean, what's a good restaurant to go to in this area? I'm a big foodie, but like, this is a minor thing, but it's like, it shows that I know the area. Hey,
Yeah.
like, there's this really good pizza place in this part of town. Hey, in this part of town, there's a really good chip truck. Hey, downtown, you can get this. Westbury, you can get that, right? Like, there's like, that shows indirectly that I know the city. I know what's happening, and that's one of those things. Like, again, I'm making a big a big life decision into like just food, but like, it's these things too, right? Like, hey, we're moving from Toronto. We're looking at a place where it has really good parks, really good amenities, really good schools. Okay, great. Here's a report of all the schools. Here's the list of schools from 1 to 50. What are their rankings? Okay, you're looking for a good Catholic school. Well, this area is where you want to live because it's close to this school, right? Hey, we want to be in an area where there's an IV school or like has a good program for our kids. They're in that right now currently in Toronto, so we're looking to move to Ottawa and get the same kind of amenity from that school. Okay, great. Well, these two areas have that. There's not, maybe these areas you can live in there. Are you okay to live here? But your kid won't qualify to be in that school district. So all these different things you want to ask, and then the biggest thing is, what are your thoughts on the current market? I would say to like, if I was interviewing an agent, I'd say, okay, what are your thoughts on the market? And if that answer is with a bold statement like, hey, you can do this, this, and this in that market, well, that might not be the right agent because no one can predict it.
100%.
So like, if somebody starts predicting things, to me, that's a huge red flag.
Yep.
That's what I would say.
That's why I'm staying away when clients ask me. I tell them I don't have a crystal ball. It could go either one of two ways. I give them the information and where to look at.
Yeah, you have to make the decision best for you based on the information that you have at hand. You can't say, okay, like last year, right? Like, if you were to ask me, like, hey, what's your thoughts? Well, I think 2025 is going to be a great year for sellers. The prices are probably going to go up, and some did, some didn't, right? And if you told me, if you're a buyer, hey, what's your thoughts on, do I wait a year or do I buy now? That depends. When do you need to move?
Yeah, that's it. Like in my experience, and I noticed that with you as well when I reached out and we started looking for investment properties a long time ago. You answer, like, whenever I asked you a question, and I noticed a pattern with the good agents, the good, well, not necessarily realtors, with good professionals.
Yeah.
Is when I ask a question, usually I look to see if they will ask me back 2 or 3 questions just to better understand my question. Yeah. If they make a million assumptions and just give me a, a very short answer, to me that's like, okay, it makes me think. It's not an automatic no, but it makes me think, is this the person I want to work with? They don't seem to try to understand. Exactly. They have like a one approach to all the clients.
Yeah, everything, one size fits all for everything, and that doesn't make sense.
Whereas you ask, okay, so what, like you said, what is it you're looking for? Do you have kids? Okay, kids, schools, have you considered this, that? Like, that's what, like, it blew me away because I didn't, in the past, I was not asked all those questions. It was just like, okay, let's show you, let's put you on a list, distribution list, let's go, and you look at properties and let me know if you see something.
I bet you so the people that I, like, all my clients, I'm assuming they've been on a million lists, right? Like a generic homes that might or might not match. And I always tell people, like, hey, when we first meet, okay, we're going to set you up to see these homes. As time goes on, let me know so we can adjust it.
Yep.
Right? Because things that you like today, you might not like in 2 weeks or 3 weeks, or you might not like it tomorrow. Right? So it's really...
And another thing I noticed you do as well is you reach out with stuff that's not necessarily on the list, just to check in, to make sure the list is still accurate. And then I haven't always seen that. Yeah. Obviously, now that I'm in the industry, I've been in the industry for a couple of years, I know who works well. So I have, like, there's you, there's other people out there also. So, but it's very difficult for a person it doesn't have that visibility to determine. And I think those questions that you mentioned are an excellent starting point.
Yeah, and I think too, like, when you're looking at a home, like, if you're an older seller, like, let's say you're in your 70s or 80s and you're looking to downsize, right? You might start looking at bungalows to start, right? Mm-hmm. And then a month later goes by, like, you know what? There's not that many bungalows that are cheap anymore. because a bungalow nowadays you're not going to get under like a good one in a good area. You're not probably not going to get it under 800,000, right?
Yep.
So, and that's like probably the starting point. Like if you're in the city, you're looking at $1 million almost, right? So, you know, so like, do you really want bungalows, or do you want to see what maybe like some small condos go for, right? Because you can get a decent condo for 400,000 or 500,000 with tons of amenities and requires very little cleaning, right? And it's going to cost you half the price.
It's true, you did that once. I thought at the beginning, I thought I was looking for, I'm not going to go into specific, but I thought I was looking for a certain type of property, and you told me otherwise. And that's the difference. And in my industry as well, as a mortgage broker, between somebody else coined the
I want
term,
the
can't
lowest
remember
rate.
who. Exactly. The point is, we're not there to be order takers,
Yeah.
like, you know, at the restaurant.
Yeah.
Like, we're there to advise.
Yeah.
So whenever I have clients with just lower interest rate, look, I'll even tell you, if that's the only thing that interests you, I'll even tell you what bank you want to
To go
go
with,
to
yeah.
for, just go to that bank. And because the what we do is we advise. Sometimes you think you want something, but what you really need is not the property type A, but property type B. And that's where I think the people who actually advise their clients don't just take their, you know, they take their order and,
Yeah.
okay, let's go see 3 houses and put you on a list.
Yeah.
I think that's what sets us both. I think we have the same philosophy. That's what sets us apart.
I think also too is like when you're looking at mortgages, is like, yes, there's some, you know, rates are important, but it's also terms. Like, what if the lowest rate, like, let's say you're looking for a really good rate, but you have cash in hand,
Yep.
and you're looking to prepay, and what if that lowest rate only allows you to prepay 2% a year, whatever? I'm just throwing a stupid number out there. It doesn't matter. Is that going to make more sense, or are you going to go with something maybe, you know, 0.25, 0.3 higher, but you can prepay 5 to 10% per year,
Yep.
right? Where you have that cash, right? And that's what your plan is to do.
100%.
So like that's like looking at those different factors. It's rates is one thing, you know, terms are the other, and like the flexibility is the other thing too. So I think that's a big one. Speaking of rates, so we're predicting 0.25 change. Is it going to happen? We'll see. I think there's like a 90-ish chance. Nothing's 100%, but yeah, this one's going to be very important, guys. So this is like October 29th. We'll see if they look at inflation strictly, or are they going to reflect on the job market and adjust from there. And then December 10th, I don't think there's going to be any movement in December 10th. I think it'll just stay put, and I think probably January and March we'll see some movement again.
Yeah, in December they'll probably reassess. Unless some things happen again, you know.
Yeah.
That are like we
Like, here's the thing. I think if we get 2 rate drops in the next 2 months, I think that's okay. And then just hold off and see how that goes for the next 3 months, 4 months, and wait until January to assess again, right? I think that's not a bad plan. Because, like, I get it. I get where they're coming from. They don't want to overly, like, give people the free will to just start buying again. Because, like, look where that led us.
Yeah.
But also, too, the like, something's got to give, right? Like we need to start getting some good programs and good ability for people to buy, the ones that can, right? But I know banks are being quite strict nowadays, so it is tricky, but I get it. So anyways, we'll see where that goes. We'll see where that takes us. Canada bond rate. This one is super important. I think this one is one of the biggest things I wanted to talk about today. So 6-month trend. So we're at 2.7, 2.693, and where were we in March? So March this year was really the peak of the market. Obviously, March, April, May is really the peak most of the time. So we're kind of close to that area. Like, that's where we were seeing the 3.89 rates, and I think we're getting very close to that. I've seen some banks even offer a little bit less than that on, like, short terms or whatever, like the 6 months, and then you can flip it back into a regular mortgage. But anyways, we'll get into that later. Yeah, if we look at year to date, so year to date in January, we were at 3.1, had some massive drops, rose again, and then now we're dropping again. I think this is going to be a good trend for the next month or two. I don't know. I don't see this, like, I don't think we're going to go down to like 2. And I don't think we're going to go down to 2.5. I think we're going to kind of slowly sit here for a bit until next year.
Makes sense. Unless any black swan event happens.
Yeah.
I agree.
Oh, what, sorry?
Unless a black swan event happens, like that trade, you know, the tariffs is not necessarily a black swan, but unless something unusual happens again.
Yeah, and if we look at 3-year trend, so what is this? September of 2023, 4.2. Yeah, like tough times, right? Like
Yep.
that's 2023. If we look at 2023 here, solds, yeah, rough year, right?
Yep.
Same, similar to this year. So, and that's the sales that I was looking at, the solds per week. So the light blue line is the 2023. So very similar to year to this, actually a little bit better in the peak of the market, but we had a similar peak this year. So I think we're gonna rebound a little bit better, but we'll see. It's all hard to predict. I think it's really hard to predict. Um, I wanted to look at just something here. So actually, I'm gonna leave this off.
I agree that
now.
it's hard to predict while you're looking. Just gonna maybe a thought I have on this is it's hard to predict, and it's important to be knowledgeable about all this. Or if you're not knowledgeable, then do business with somebody who is knowledgeable.
Yeah.
But I can tell you that I don't recall. I was talking with another mortgage broker saying the same thing. I don't recall the interest rate that I had back in 2011 when I bought my condo.
Yeah.
Or the one that I got in 2012 when I bought my first townhouse, or in 2014, or any of the other ones. So I think while it's important to optimize, there's a limit
Yeah.
on. And you mentioned even about the banks, right? Like the lowest interest rate is important. All things being considered, if everything else is equal and the repayment options are equal and all that stuff, yes, obviously go for the lower interest rate. But sometimes you might pay, I see it as insurance. You pay a little higher interest rate, let's say, $15 more per month on your mortgage.
Yeah.
But you have a higher chance of getting approved by your bank especially if you have a more niche property like a cottage on a lake with like a UV lake water sanitizer. Not all banks, and most people don't know, not all banks will approve that. If you don't know, you're dealing with a mortgage broker who doesn't necessarily understand this. They submit your file, it gets rejected, then you have to go look for another bank. You might lose the property. So I think that's where it's important to put the rate into the bigger, broader context, as you mentioned.
Yeah, it's it's just it's tricky, right? Like 5 years from now, we're not even gonna be talking about this, so it's not gonna matter.
Exactly, it's important to understand it though, to understand the trends, and to understand that when people are doing business with you, you understand the market and you're helping them and you're guiding them and you're advising them. But I would also caution people to not get bogged down and slowed down by too many details. You have to understand the situation and make sure that you make the right decision, but don't let all the details paralyze you and drive you to inaction.
Yeah,
What I'm saying.
exactly.
Like,
Like,
what are you?
Information overload is a thing, right? So sometimes you get too much information and you can't process enough, and then you just don't make any sort of decision. So
Ever happened to you that you're deciding on a Friday night, you've had a long week, and finally you have a couple hours to yourself, and you can't decide which movie to watch because you have so much choice?
yeah.
Whereas back in the day when we were
every
kids,
Friday.
yeah, and back in the day when we were kids, you just open the TV, you have 3 channels. Okay, it's like
That's
one
it.
of the 3, that's it. Okay,
Yeah,
we're gonna
TBS
watch this.
Superstation. That's what I'm putting on. Right? There's
The paradox of choice.
Yeah.
So that's why sometimes you just have to make a decision and roll with it.
When there's too much choice, you don't know, right? But anyways, like that's kind of it for that. I wanted to just kind of look at some of the pockets.
Yeah, let's do that.
So let's take a look at detached.
Man, I love these market updates.
Yeah. So like, let's take a look for detached homes in Canada, Stittsville, whatever. Let's include this. We got 223 detached homes. Under 1 million, 140. There's 120 homes over 1 million in Canada. 140 under.
Not surprising.
Yeah, Canada has like some pretty expensive areas, so I get it. Let's look at Barrhaven. We'll leave out Canada. I'll include Riverside South as well. Let's do that.
Mm-hmm.
So Barrhaven, we have 123 under 1 million and 180 detached. But let's take a look at this. Attached, 156. 156 townhomes for sale. Freehold. Let's see how many are under 600. 65. How many under 650? 108. Oh, what
Do
did I
we have any, while we wait for the screen to reload, do we have any data on active buyers each month? Just for fun, because that would be good. You know, I think it'd be awesome. But I figured no, because
Yeah.
not everybody, you know, you don't have realtors reporting I'm dealing with 3 buyers. But it'd be good to know. Let's say there's 150 townhomes for
Yeah.
6,000 buyers looking in Barhaven. So that gives you an idea.
I doubt it's
versus-
that
yeah.
much.
No, I know.
I doubt it's probably like 1,000.
Just like I was just making up numbers, just like you would
Yeah.
be. But yeah.
What's happening with my screen here? All right. So technical difficulties, but I'm just gonna read it off. So basically 7 days. So the last 7 day trend.
Mhm.
Give me a sec here. So we had 1,105 new listings, which is very high. There was 423 properties sell. There we go.
There we go.
right,
Just,
so I'm
it's
reading
the
it
old
off.
the old
Yeah.
Balkan where you just tap it and
Yeah.
it works.
So here's a few things. So in the last 7 day trend, so that's Thursday to Thursday. So new listings, we had 1105 hit the market, 422 price decreases. So these homes were already listed
Mm-hmm.
that decreased in price. So that's motivated sellers. Price increases. I don't know what's happening there. Let's take a look at that. Okay, so this one was an error. Was listed for 3,800 instead of 3.8 million.
Makes sense.
This one,
I would have bought it for 3,800, I think.
yeah. This one, same thing, clerical error, missed a zero. So, let's look here. So, yeah, this one, same thing. No, went from 1689 to 1.989.
They missed they $300 $1,000 difference. They probably mistyped.
No, but it's been on the market for 30 days.
Oh, before the change?
Yeah.
Okay, I thought maybe they mistyped and they meant to. Interesting. What do you
No,
think that is? Why would
very
that?
weird.
Just out of curiosity. When
Well,
people
the
see that,
property's
why
been
could
up
that
for
be?
sale all year, so let's look at the history. So started in May 13th of this year for 2.6, dropped to 1980, dropped to 2395, dropped to 1989 by August. What is happening here?
Yeah, I don't see the 1.6.
Oh, sorry, it's because
Oh,
there's two listings. So there's residential detached and then residential farm. So yeah, same thing. It's just following.
Yeah, it's the
Okay,
second
and
one
then
from
they went from
that one.
1989 to decrease to 1689, then increase back. So I guess they just weren't. They thought I don't know. That's a weird
It's
one.
an interesting strategy. I've seen that happen on the Quebec side as well.
Yeah.
Sometimes it's just like moving up the price up and down, and nothing happens with the. I always wonder what's
Yeah.
going on. Maybe
So-
one day I'll call just to ask.
This one here too, like tricky one, right? Listed
Right.
for $1,049,000 on market like on the 8th of September, and then increased price by 50,000.
Hmm.
Probably got too much interest and said, yeah, we need 50 grand more. I don't know.
But usually, in my experience, when you get too much interest, is multiple offers and it goes over the
Yeah.
price. So that's what this is surprising to me. But
Yeah, so this is James Street and Bank. Interesting. Okay, what else?
free publicity.
Yeah. Yeah, a couple of clerical errors. These guys increased by $900. I don't know why. 369 to 569, so clicked the wrong number. 499 to 529. What's happening here? Very weird. 499 to 5, so that's very interesting.
560, 499.
560 listed, dropped to 499, and then increased to 529 because they're thinking that the market's gonna explode here and they're gonna make 30 grand more. Yeah, interesting stuff. I don't know what's happening out there, but shows you what's happening a little bit.
5 beaches that we can't understand.
This one's interesting though, like sold escape clause. So a lot of like people should look at this as well. So these are homes that are actually technically available. They just have an escape clause offer on them. So that means whoever bought this home, the home's conditionally sold, but it has escape clause, meaning that they have to sell their own home first before they can finalize on this one. So technically you can still make an offer on these homes, but they have to give notice to the first offer and tell them, hey, you have 24 or 48 hours to let us know if you're buying it. If not, we're going with the other offer.
How much often do you see this happening on?
In this market, it's a little bit more often, but like you'll see here, like it's not all of Ottawa, right?
In Gatineau, it's becoming more and more rare. We call it
Yeah.
conditional.
Yeah, it is. Like here's the thing: there's 47 of them this week, which is not that common. But a desperate seller might take it because it still gives them the ability to showcase the home.
Agreed.
So, what else? Expired, 115 expired. So, yeah, they went from active to expired. I'm assuming most of these will just come back up. Like, I'm assuming, like, if we just click on one of these, yeah, so it's been leased now. Weird. Lyndhurst. Expired. Okay, some of these are not coming back, but let's see. Okay. Maybe I have to go through the new listing because it's the new one, but whatever. Solds for, yeah, so like really 423 solds and then another 381 sold conditionally. So I'd say probably about 70 or 80% of those conditionals will go through by the end of the week or by next week. So yeah, there's a lot to look there. I'm gonna put a list of my top 5 properties as well in the email, as well as what we have on the market. We got lots of listings, lots of rentals, lots of new purchases, new homes, and all that stuff. So, if you guys have any questions, feel free to respond to the email. Mihai, where can people reach you?
Instagram mp.mortgage, email or www.mihaipascu.com, but I don't want to take the time to spell it. MIHAI.
I'll put it in the link.
Yeah. But MP Mortgage is fine. I respond to my Instagram
Awesome.
messages.
Great. If there's any questions, as always, feel free to respond or leave a comment, and we'll get back to you. I hope everybody has a good start to the fall.